What better time to talk about crypto asset valuations than when everything is probably pumping?
Dead coins, meme coins, FTT, I saw is pumping. So you can take your pick.
If these L2s start to use their own native token or USDC for gas, then that disconnect becomes even more apparent. But maybe Sam doesn't agree.
Granted that there are more coins in Type 1 than just Bitcoin, is this just a one-way street?
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners. Safe is moving the world's GDP on-chain. With the introduction of SafeNet, Safe is taking this to the next step very soon. Check out net.safe.global to learn more about how Safe is moving the world's GDP on-chain. What's going on, guys? Welcome back to The Roll-Up. Today's episode is with Sam and Jordi, talking about valuations of L1s, L2, and broader crypto asset monetary theory. This was inspired by, a lot of conversation recently, but most directly a podcast we did with Justin Drake that Sam had a notoriously viral quote tweet on. So Jordi's here today to address some of Sam's thoughts and hopefully disagree in some capacities and probably agree in others. Sam, why don't you, first of all, welcome to the show again. It's great to have you guys both back. And Sam, man, why don't you maybe start us off with that tweet and kind of how that all came about into your writing?
For sure, yeah. Hey guys, good to be back again. So what better time to talk about crypto asset valuations than when everything is probably pumping, right? But the more important aspect in my view when I think about stuff is how do you actually value it, right? Instead of like how is the price going up or the technical analysis. And so the whole thing for me is I'm an ETH bull. I like Bitcoin and stuff, but I'm also like a big ETH aligned guy, right? And basically like the past year, right, like Solana's been gaining on like ETH, the ETH BTC like rate is like the all-time low or something like that. And I always had this like view of like my thesis is this: there's only two types of tokens, and I've never really articulated this out until I posted the thread and it actually went viral and all that stuff. But basically like there's two types of tokens. There's commodities, scarce assets, fixed supply, Bitcoin, also in my opinion, Ethereum. But then there's the PEDCF valued assets. People call them governance tokens, right? Price to earnings, discounted cash flow. And my main gripe, to just put it in real simple terms, is like, I think Ethereum is like Bitcoin. It is a scarce sovereign commodity. And like I define that, and I'll talk about it. But the issue is, it's being redefined, whether unknowingly or knowingly. I don't know. I'm not trying to give intent to a discounted cash flow type asset. And my view is like that is basically going to make sure like Bitcoin far away surpasses ETH in market cap and long term value accrual as like a scarce digital store of value, is like a commodity, is like nation states buying it in reserves and everything. And so the tweet that you're referencing is like, Justin Drake, he was on and like, he was like, well, we can muster multi-trillion dollar valuations for ETH. Why? Because the burns will be like so big, right? Like the burns, the EIP 1559, the base fee gets burned in Ethereum's protocol, right? And the cash flows from that will be so big that Ethereum will be like a large tech company, like Apple or like Nvidia.
And from DA specifically as well, just like DA at scale using blobs basically as well.
Exactly. Like the gas fees, whether they're blobs or like the transactions, basically they get burned, right? And in terms of some base fee calculation. And then he was saying from an economic perspective, from DA, transactions on the, execution layer and stuff like that. Ethereum's like a big business. And that just kind of, I guess that was the straw that broke the camel's back. I was like, okay, this is it. This is so textbook, like my issue with everything, that I'm a huge ETH bull. I still am. I will be. But I think this is as bearish as it sounds for Ethereum, because Ethereum has about 2-3 billion in burns a year. It slightly changes now. Look, it's slightly bull market, so it might be a little more. But it has like a 500 or 400 billion valuation, right? And that's like a 100 over 100x PNE, and compared that to exactly the companies Justin Drake was saying, Apple, Nvidia, and stuff that have 400 billion revenue, like annually, and they're worth like a couple trillion. Like ETH is already there, right? It's only 10x different than them, but it has 100x less revenue. If you want Ethereum to be valued as like a business, literally he said all the words, right? I think if you can actually even put it up later once this podcast is up, right in like the corner or whatever. And this is my thesis, right? My thesis is there's only two types of tokens in crypto. All the other stuff people talk about, meme coins and stuff, they all fall neatly into two categories. There's scarce commodities, and by commodity I mean literally something like real commodities, right? Like digital gold, like gold, silver, and stuff. And there's digital versions of these, right? And they have a specific value. And then there's tokens that represent labor, right? They represent some kind of actual cash flow from either automated labor, right, of smart contracts, or human being labor of like DAOs or whatever, and all of this stuff. And not to sound Marxist or whatever, but like labor, it's all just representing labor. It's the theory of labor of the second type of token is just that. And you could say, okay, these are more securities like, or these are not, whatever. Those are all for like regulators to decide or something, right? But my point is, Ethereum started off as like this type 1 asset that I call it, that the Bitcoin is. There's other L1 tokens or have typically been like this. Obviously, it's smaller valuations, right? Like less valuable like commodities. And governance tokens and equity-like tokens are like usually things like in DeFi and stuff like that. And they're accidentally moving ETH to this side, whether or I don't know about intent, accidentally or prefer it, or I don't know, right? And if they do that, I think it's a big mistake. So that's kind of my overall view of it.
Yeah, I'd love to hop in and join the discussion. It's something that I've been thinking a lot about for years as well, and I've really recently been saying that the misallocation of capital that's happening in crypto is like one of the biggest problems towards evolution and like getting to a serious level. And by misallocation, I mean the next $1 trillion that's coming in is being allocated in a way where we don't know what these things are worth. People are just like randomly comparing one thing to another thing, like, oh, Sui should be 20% of Solana, which should be 50% of this based on some random metric. And obviously, like a lot of money is going into assets that are not necessarily considered to be particularly good assets. Sometimes, you can take your pick, whether it's dead coins, meme coins, FTT, I saw is pumping. So like you can take your pick. But this like misallocation, I think, comes from we haven't done what I think Sam is trying to do and others are starting to do, which is create a bit of a consensus framework of, okay, here's the types. Me and Sam might disagree on like how difficult it is to go from one asset to another or these things, but at least we can agree on like the rules of engagement of what makes sense. And it doesn't have to be something that's taught in a textbook at Harvard Business School or something, but it would be good to get towards that direction a little bit, I'll say. And Ethereum is probably the most interesting of the assets. We should talk about more assets, not just get stuck there. But I think it's interesting for some of the reasons Sam mentioned, which is, it's gone from proof of work to then proof of stake to, looking at triple point asset. I spoke with Vitaly today, and he's like, well, it's a triple point asset. One of three things can go well. So we're kind of hedged. Like this can go well, or we burn a lot, or like this one might go well. I think like, that's not necessarily the right way to think about it, is like, oh, I got 3 horses in the race. It's more like figure out what your horse is and just write it well. And ETH is unique. I mean, just to start like the kind of like nuances or disagreements with Sam, for me, the EIP 1559 is a good thing. It is a bullish thing. I think the thing that's not bullish is to obsess about it and try to model around it and be like, yeah, like this $2 billion, this is why we should be worth, some multiple. That makes no sense. But Bitcoin at an 8% inflation versus 4% inflation versus 2% inflation has just much more reflexivity. And I think we're starting to see that now, where it's literally less than whatever Michael Saylor buys on a Tuesday is like the annual Bitcoin inflation at this point, it does make a difference. And having this burn creates a good attribute. It's a good attribute for this type of commodity asset, but it shouldn't be the end all be all, I guess.
Yeah, I think like so Jordi said it actually really well in terms of not obsessing with the burn. I actually went even further and I actually laid out my framework in like a pretty long form additional like tweet, almost like a like Jordi's saying science of like valuing these things, which is like I think the issue with Ethereum, and actually we'll talk about other stuff too, because I actually think this applies to everything. Solana sounds everyone's super excited for it too, right? And then it's like this will happen with Solana's age and size too. Like people will start having to discuss, wait, what is this thing? Is it like the like how much does the blockchain make? Is that part of the social Overton window of like, do you actually like do you actually model that? Where it's like for Bitcoin, it's literally not part of the Overton window, right? The thing, the acceptable range of discourse for how to value this thing. Bitcoin holders don't get any kind of revenue. It's just not structurally how this is designed, right? It goes to the miners. The miners are not the closest thing to the shareholders, BTC holders. If you even try to like model this as like shareholders of, right? And so they won't get any, BTC holders won't get any fees, right? They never will. So it's not even in the like social like conception of modeling this, right? But this will happen to every single like non-Bitcoin asset. And my view is the thing I laid out is like Ethereum, the technology is so brilliant. It's so good. And as Vitalik said to you, Jordi, and I was talking to him a little bit on Signal actually about this thing as well a while back. He kind of agrees with kind of the direction of thought here is like, we need to separate Ethereum, the technology, right, the blockchain, from Ethereum, the asset. And the issue is that, and you do this for all assets, and then you see, does the asset represent labor? And so it's literally just intertwined as a representation of, the fees from the smart contracts or the labor of like devs or something like that, if it's a DAO or whatever, or is it totally distinctly separate where the asset is the product and like the technology is just the actual literally medium for which it exists, right? The blockchain technology or something like that, right? And like Bitcoin, the asset is the product. It's BTC is the product. And so, a lot of people say, oh, it's because it's proof of work or something like that. I actually think like if you really had to, you could move all of the Bitcoin distribution to like an ERC20 token, and it would still have most of its market cap. If like, I don't know, if some weird like mathematical thing happened with like quantum computing or whatever, and like the Bitcoin blockchain broke, but Ethereum updated faster, you just move everyone's balances and it would still have trillions of market cap, because the social distribution and the fact that this is a store of value is important, and it's totally distinct from the fact that the blockchain that's proof of work helped us get there by like closing the Overton window of like how you actually define it. But people separated the BTC asset from the technology much easier, probably because the Bitcoin blockchain is super simple, right? So it actually got the job done. The main issue with the Ethereum, and again, everything, we could talk about a lot of other stuff, because I think the reason this is such an important thing to me, and also how we design Frax's new tokenomics and the new roadmap that we just announced, is like, it's a thing for every asset, whether they like it or not, right? What's this famous quote that's like, you might not be interested in war, but war is interested in you. Like it's like a geopolitical, I forget who said it, but it's like, you might think this doesn't apply to your token, but guess what? People buy and sell it. It does. When it gets big enough, people will decide, okay, wait, how do we value this thing? And so it's coming for Solana too, right? This kind of like, is this a type 1 token or a type 2? Like, and the issue is Ethereum, the technology is so good and it's so powerful. There's settlement DA, like the EVM that they invented, right? That it's hard to actually separate it unless there's a really good science, like a framework of like, okay, separate the asset first and the technology. And it just so happens that this scarce asset is what is used in this technology. You can like, because everyone knows there's like going to be account abstraction, so you could technically pay gas and other stuff, right? It just so happens that this thing is the scarce asset that you use in this technology stack. And when you think of it like that, the Ethereum blockchain technology is just one digital industrial use case, similar to it being in LPs, similar to it being in DeFi and all this stuff. It's just people have been kind of mind, virus or like psyoped. I'm not saying a specific person's behind it or anything, but like just confused that, it just represents gas burns, right? Like and like that makes them think that this is not just a scarce commodity or asset, but they should just value it as like a PE DCF cash flow. And then the issue is then people respond with, well, you can value it however you want. It's ultrasound money or this or that. Like it's Ethereum's decentralized, guys. Just value it. Everyone just value it however you want. But that's actually what's really destructive, because without like a really clear like Overton window of like the acceptable range of like discourse of what this thing is, what you call it and how you value it is quite literally what price it becomes. All of this stuff is a social construct, right? They're just numbers and bits on a piece of software, which again is itself just a bunch of representation of bits, right? Money is a social construct. Like you literally will it into existence as like a social coordination game, right? Like pieces of paper with dead presidents don't have value. It's only because we created a society where you pay taxes and can buy food with them and stuff. There is a social construct, right? And so you cannot say everyone value it however you want, because if you have like the Wall Street ETF issuers saying, hey, if you want ETH or Bitcoin in your retirement fund, this is what you should look at. Bitcoin is a scarce commodity. It has no revenue, but it's really good because like all the nations are going to buy it. ETH is not a scarce commodity. It represents the cash flow from like Burns, and it has like a $5 billion cash flow or whatever. That the fact that they write those things like that literally causally changes the price, right? And especially KOLs too, right? Like Justin Drake and all those things that have downstream mental model effects.
I think people buy any of these assets, any of these blockchains for a reason, and for the vast majority, the reason is numbers being going up. It means it's good. Price begets explanation, right? And then sort of you just get this momentum. And unfortunately, this still works tremendously well, and it's why we have firms, market making firms or whatever, doing these like momentum ignition strategies where they'll put the first $10 million to sort of create activity, and then people buy because they see the price is up. It must be good. It must be a good coin if the price is up. And this mindset applies to all crypto assets. In fact, like, Ethereum got so fudded and reflexively went down because the price was going down. And all this debate, I mean, one thing that maybe Sam agrees on then is like this L2, like are L2s parasitic to ETH? They're taking the fees, or like, who cares about the fees? Like, that's all like secondary. However, just the social construct of like, well, price is going down, maybe it's because of this, but then the price, it kind of causes more price going down because people have an explanation for why price is going down. They think it's because of L2s. I don't think it's because of that, but it sort of feeds upon itself, and then it's a bad asset now. So then the timeline over the last year for people like Sam, who are very like ETH aligned, I'm somewhat ETH aligned as well, it has been like witnessing the most deteriorating like levels of depths. You've never hit this kind of like rock bottom, and then suddenly like price goes up, and then it's a good asset again. Like they fixed it. The technology is rapidly improving, as they say.
Yeah, I mean, Jordi, the tail that wags the dog, or the other way around, right? Does the dog like wag the tail? And I think the main like problem, though, I think, and I try to take a first principles like philosophical approach with this, is like all of this stuff, like the L2s and everything, is downstream of the fact that like people are confused about being able to separate Ethereum the asset from Ethereum the technology. And again, because Ethereum the technology is so good, you can create L2s with it. There's like DA and settlement and all this stuff. People don't know if the L2 is parasitic or not or something, because they can't even value the asset and separate it from the technology. And all of this stuff, it's like a downstream waterfall. And the main thing that I wanted to, posit in that thread and actually said is like, you can actually just model instead of doing PE DCF if it's not a discounted cash flow token, is just the industrial use case of a digital commodity, right? The way that like gold is used as a store of value in vaults, it's used in jewelry, it's used in circuit boards, it's used in various other industrial use cases. The sum total of the demand flow for that literally translates to the actual market cap of gold, right? And so in the digital realm, with digital commodities, it's the industrial use case of everywhere that it exists. People like issuing their tokenized labor, right? Their governance tokens and stuff to use ETH as like a liquidity source, right? Or to use ETH in other places and things like that. And then also the Ethereum technology itself happens to use ETH, right? The burns happen to be one sync, not the actual representation of the asset itself, right? And it's much easier to see with Bitcoin because it's such a simple protocol, right? That it just has different use cases. People build their BTC Fi or whatever and the ETFs and stuff. And these are industrial demand use cases. And the reason I, by the way, say commodity rather than, monetary premium, I say this like commodity premium or demand, is monetary premium and money is such a loose word and it's so confusing to people that it's such, again, it's actually, I think it creates more confusion than actual like clarity, because money is different. Everyone, like, some people think gold is better money. Some people think you need a stable currency that's like to a consumer price index, CPI like asset that keeps a safe standard of living. And then as soon as you bring money, right, everyone has a different representation in their head, and then they're like, oh, it's a store of value only for buying and selling stuff, and it actually brings more confusion. So the thing is, if you actually have a framework, you can actually answer these downstream questions like RL2 is parasitic, or what does it even mean to be parasitic? If you remove, commodity demand for the asset, right? Now you have an answer, right? If you go with this framework that I'm kind of proposing here, right? And so the issue is, even moving away from ETH, what's going to happen is it's going to be relevant to Solana and like Celestia. Actually, like I was watching the John Sharp episode that you guys put out the other week, which is like, everything, even if you're not interested in this, right? This valuation framework is essentially interested in you, because as the asset gets bigger, people will be like, okay, what is this thing? Is it like Bitcoin, or is it like, like a discounted cash flow, right?
Yeah. And I think that's what we're seeing across the board, is that you get to this end game where it's what we've came to know from those conversations with John, Tarun, and kind of just seeing it firsthand, is that it's been this spectrum where these assets have properties of this kind of commodity premium or monetary premium, but also still have reminiscences of the technology, that kind of like software element, or that that kind of like cash flow element based on MEV on chain, or based. And so like what we've identified, and curious to understand how you guys think about it more deeply, with specifically with these four assets. Like Bitcoin's kind of like the special asset. It's pretty much 100% commodity. ETH has gotten to be more like, probably closer to like, in my view, even though Sam, you think it might be a bit more far off, I think it's still like 75% commodity, 25% like kind of cash flow type of thing. Solana, I think, is much closer to like 50-50 or less, being like more of like this technology NASDAQ kind of thing, less money, if not like probably like 25-75 in terms of 25% commodity value. I think it still has a long way to go. And then Celestia, I mean, Celestia is hardly even in this conversation at this point, but I think it's more like 10-90. And I mean, those numbers can vary, but that's how I'm kind of thinking about like Solana with regards to Ethereum and Bitcoin. But what's funny about that is that Solana has outperformed them all in the last several months, in the last year, even though it's not even trying to fight for this monetary status or this commodity status. So, yeah, Jordi, I'm curious. Like, do you think about those three assets or four assets in a similar way, And do you think that the performance of those three assets is at all correlated to these narratives driving, or is it just complete like outside factors?
I mean, I'm happy to share my framework that I've been putting together over the years. It's a little bit different. There are things that tie in. The concepts that Sam talks about, I agree with, but then there's like a disconnect on the, um, yes, monetary premium is a weird thing to talk about, but I'm quite comfortable breaking that down. And I've used some terms before that we'll get into, like community money, because I think at the essence of it, yes, we can say it's all social consensus, but social consensus is built upon a couple of things. It doesn't just sort of magically come out of nowhere. And things that I've discussed at length before include like provenance, like some of these like religious aspects. Something like a Satoshi creates this anonymous and then disappears. These things are just they're not technology based, but they're more important than technology because ultimately, like they drive a story in people's minds. Like these are the social consensus. This is what it's based on. So I don't think of percentages, and I think that's why you struggle because your example starts very comfortably. Okay, 100%, and then maybe this one's 75, but then you start kind of like grasping at straws. Like, what is Solana? The Solana one, I would say, is the one that has always made me refine and sharpen my tool on this because that's the one that creates the challenge for these processes. And I'll say why. I mean, you talk to Toli, he'll say, he'll just say it's not money. It's not trying to be money. We don't care about this money stuff. We're just building good tech, and I just want the apps to be valuable. And this is just like the token, underlying, but like I don't care. It's not money. You talk to Kazemian, he'll tell you, well, MEV is everything, and it's all about trading in MEV, and like we want to capture the MEV. And then when I try to challenge him and say that, in a well-designed system, MEV gets minimized because it just gets returned to the user, he's like, yeah, but there's still going to be a lot. It's okay. It'll be fine. It'll be a lot. And so like everyone in the Solana ecosystem is sort of unclear what's happening. And what I call it at this point is like, why is it outperforming? It's like the ultimate meme coin, just like you have all the meme coins on there. This SOL meme coin is the biggest of all the meme coins there, and it's just the one with like the most attention. So I had to come up with this concept of community money, and I'll just like introduce it, maybe get Sam's thoughts, get your guys' thought, but it comes from a place of Bitcoin is, in my mind, like gold. It is because of the provenance that is so indisputably strong. Like Vitalik will say, there'll always be one asset that's 5 years older than the next serious asset. It'll be Bitcoin. It is a macro asset, and I was a macro trader for many years before getting into crypto. I see these things, through that lens sometimes, where this is like a geopolitical asset. Every country's creating fiat currencies, and there are these like few assets like gold, Bitcoin that sort of act as a benchmark. That is like this watermark that nobody can really break it, and so all the countries have to align with it, and not align with it, but they get benchmarked to it. Like, what's the all-time high of Bitcoin versus yen? Oh, we crossed it ages ago. Like it wasn't now, it was like ages ago. So like these things sort of act as this barometer, right? I will strongly agree with Sam that I think that Ethereum has earned the right to at least be in that conversation. The reason is because it is strongly provenant as well, being the first programmable, smart contract platform with an asset. And that is different enough than Bitcoin, because the things you can do with it are substantially different. But at least there is a it deserves its place in the horse race. Like it should have a slot, and maybe it's challenging, but like it deserves its place. It's the first smart contract money, and maybe in the future we'll all have social consensus that smart contract money is the money, and this is the oldest money, and it's distributed well at this point, has very good distribution. And then when you go further down the list, and you mentioned Solana and something like Celestia, they'll always, the proponents of those, like the talking heads of those things, will always be like, oh, well, if ETH has it, then why don't I have it? And then if Solana has it, why doesn't the next guy have it? And you go down. And that's a fair point. They're all very similar technologies. They lack some of the provenance as you go down, of course, but they might have faster TPS, et cetera, et cetera. I think ultimately what it comes down to is those non-macro assets are community money. And NFTs are maybe like the easiest way to explain that, because even though, we've had cycles in NFTs and, whatever, the fact that the NFTs are an asset that gets denominated in that sort of local currency is very similar to, like, you visit Morocco and you got to get the local currency to buy the thing in the market, right? The more people that are interested in the market that fly there and are buying stuff, the stickier the currency is, and you can just hold it and denominate your income and your expenses in it, because it's sort of it's like a GDP of a country. It sort of grows, right? And so all that matters is like the strength of the community. How many people is it? How rich are these people? Like how dedicated are they, and like sticky are they? That's it. Like that community. Once you get outside of Bitcoin and maybe like a little bit outside of Ethereum, the valuation in as I see it is like around the strength of the community.
So
I'll just
Jordi
stop.
said a lot of great things, and I actually want to go from the top down. What I'm the most interested in is categorization, and that sounds kind of funny because I studied philosophy and neuroscience in college. So everything I try to do is I'm like, how do you categorize, or how does your brain think about stuff and whatever, and that's not how crypto people like think of it. They're like, how do I make money from this thing, or right, or like how do I trade it and stuff. And so actually, when you brought up Solana, I actually think you're exactly right, but I wanted to actually say I think Kyle and Anatoly are brilliant. They're not given enough credit. Where like when Anatoly says, "I don't want to actually I don't care about the revenue or whatever," that's actually the best way to get Sol to be more like Bitcoin than what the ETH like guys like Justin Drake and stuff are doing. That's like the treat. Like it's like really brilliant. And I think when Kyle, for example, says the MEV stuff, I think he's literally just saying something like, this is a metric that you can actually use to quasi measure, like literally how rich the ecosystem is around like a scarce digital asset, like the way that you do that, how rich is the state, right? And like how much MEV can actually be produced, and like then the downstream discussions like, okay, well, what happens to the MEVs that get distributed, blah blah blah. But it's basically the main two categories I'm just the most interested in is like, does it even make coherent sense to talk about this representing cash flow, right? Let's say, for example, as a thought experiment, there was this new way you could use gold in like the real world that changed its molecular makeup and like burned it out of existence. Like it turned it to lead, reverse alchemy, right? Instead of turning lead to gold, you turn gold into lead. We wouldn't say gold is now like a cash flow stock, right? You wouldn't say, oh, well, now it's getting removed from circulation. What's the PNE DCF of like gold that like these companies have this, interesting industrial use case that like removes gold from circulation? You'd say, no, this is an interesting industrial use case. And actually, when it's used in this way, it's just removed from circulation, rather than when it's like used in jewelry, you could melt it again and then use it in gold bars and like store it and stuff like that. And so these use cases of like a commodity, the only thing you can describe a commodity doing is being used. You cannot represent a commodity as like the labor of people, or like the fees of some kind of like labor or corporation, which is just a group of people right at the end, like doing some coordinated labor, right? And so what I'm super interested in is like putting this clear framework out of like, when does it represent the labor of people, and when does it just not make coherent sense to represent the labor of people, right? Like it's very obvious for like physical stuff that we're used to, like gold. It makes no coherent sense. If gold was like burned out of circulation, if gold was, it makes no sense, right? And so like actually what Jordi was saying is really a good point in terms of these community coins too, is like, if the community coin, the meme coin or whatever, it doesn't actually make coherent sense to ever talk about like dividends, cash flow, these things. It's a commodity. It's like branded with frog, like faces or whatever and stuff like that. But it's pretty clear, right? And Jordi said something extremely important that I want to make sure we like at least bring up is you can't just will it into existence. Only what you have to do is it has to be the correct properties and the correct social coordination. And so, for example, the provenance that he was bringing up is very important because you can't have something that doesn't have a fixed supply or at least like a fixed equation like Bitcoin, like Ethereum, right? Like a fixed equation that it takes extreme coordination to like hard fork out of, right? Not like an MSIG that's like 3 people, not like the expectation if you issue a stable coin, if it depegs, you mint a bunch of it to like this token to like keep the peg or something. It has to be sovereign, which is why I call it a sovereign commodity, right? Like when I talk about it, it has to just be itself. It has to be the actual product in and of itself. It has to be the thing that is in existence for itself as like a sovereign piece of like digital value. And then you could use it in those places. You could say, hey, like if you have one of these like units, you can vote and stuff, and then like we can organize our life around it or something. Sure, like BTC maxis and stuff, right? But like you can't just will anything into being a digital commodity. It has to have the provenance. But maybe a separate discussion other time. But I also don't think it's uniquely to Bitcoin. I think you can clearly have these sovereign valuations of commodities downstream too. They just won't be like a couple $1 trillion, of course, but like these properties are in existence. It's not just gold that exists, right? There's like silver, magnesium, this, that, all this stuff.
I think Jordi did a great job of generalizing to the type 1 framework, sticking with this type 1, type 2 framework. Jordi generalized this type 1 into this community-oriented coins, ones that aren't tethered to the labor of their economy, and they have almost like this imagination value of what it is, which helps the valuation. Now, my question is, granted that there are more coins in type 1 than just Bitcoin, is this just a one-way street? Is this just like the entropy of these economies to devolve from type 1 into type 2? Even if we were to organize some sort of assimilation tactic to reorient the path of Ethereum, is it possible to put the genie back into the bottle and move towards the direction from type 2 to type 1? Redstone modular oracles are available on 50 plus chains, trusted by over 100 clients and over 6 billion in total value secured. Visit redstone.finance to find out more.
Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fractal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fractal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fractal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fractal mainnet. Bridge your tokens and bring your Frax assets into the Fractal ecosystem. Join today to get the best out of Fractal. You are still early. Join today. Take part in our expedition into the singularity.
Jordi, do you? Well, I guess I could start, and then Jordi can round out, because my view is on it. Like, if Ethereum can slowly become like you said, maybe the entropy is the gravitational forces. Like only Bitcoin can be this, and then everything devolves to
and Bitcoin was able to ossify extremely quickly, almost as soon as it started. And so maybe they were able to stop that entropy in its tracks, or at least slow it down significantly before it progressed.
Yeah, although I've been in crypto for over like a decade, and the max supply, of course, right? But not the social discussion of. I remember when I got into Bitcoin, like in 2013 or something, people thought you'd be using it to buy your coffee, literally, like the like Bitcoin is like, oh, this is like this many satoshis or point oh oh oh, like one like Bitcoin, and that's no longer socially in the Overton window. Like no one just it talks about it all, and so it does take longer, but my point is that I think if you can accidentally start ossifying from like the type one, like the sovereign scarce commodity, to type two, either accidentally or in a concerted manner, you can go the other direction. But it's hard because unless you have a good framework for like, and the framework is right. I'm assuming, like, I think the framework is right. You have to get all of it right. For example, we actually launched our roadmap for Frax, and we're rebranding the token from Frax Share to just Frax as a scarce asset fixed supply. That is actually the token for the Fraxtal blockchain, and stuff. And there's a few things you have to get right, but over time you can go from the first to the second and the second to the first if you get these things correct. I don't think it's just to Bitcoin, but people have views that these are. It's very difficult to test, right? Like in like a closed environment, which is like some people say, well, only Bitcoin can have this, right? So there's like devolving of entropy, that everything will just be discounted cash flow, and so like meme coins are going to zero because there's no way, there's no cash flow mechanism or whatever. But interested to know what Jordi thinks.
So, yeah, I agree with a lot of what Sam just said. The attributes that make good type one money, like commodity money, community money, to me, are kind of indisputable. And when I judge all the cryptocurrencies, I look at them in this priority, and people are like, "Oh, Jordi's a Solana hater or whatever." I love Solana. I use Solana, like great community, great everything. I will consistently like have my issues with it as community money for the things it lacks, which is one, um, VC unlocks for years. I've talked with Anatoly a bunch about this, and he's always doesn't get it. He's like, "Oh, what's wrong with VCs?" With VCs, because he's not trying to create good money. But good money does not have insiders. It needs to have this credible neutrality that you don't get reminded of, because every 6 months there's some like massive unlock, and then you got to deal with who's getting tokens. Plus, the fact that there are lock tokens and unlocks coming means that the forward curve is usually negative, which means that your expected value of holding the tokens is negative. This is very bad community money. Like, this should not be the case. Um, you know, the reason, like, one of the reasons I'm comfortable, representing Mantle in many cases, and like, having this MNT token, because everything's unlocked. There's no VC unlocks. I know there's no negative sloping yield curve. That's why it's, not to show, but like it's been the best performing L2 asset, while all these other ones just have constant VC unlocks, VC unlocks. It's just a very bad characteristic of like a token to have, especially if it's trying to be this. So that's one thing. In terms of going back and forth, what Robbie asked, the issue is equities are okay to be centrally held. Like if one guy has, like, Berkshire Hathaway, whatever, they have all the equity, it's fine because it's cash flow. It doesn't matter. Like, one guy can have all the cash flow and it still works, right? Like, there's nothing wrong with it. But you need like a really good sort of community fair distribution that's wide. And so if you go too far in the direction of cash flow, and then somebody just buys the cash flow because they think it's a good business, and then you want to go the other way around, I mean, you're gonna have to like just distribute it in a way that looks very differently. And the S&P 500, the reason why the S&P 500 never goes down and always goes up, is because everybody in the US like has it in their retirement account, more or less, like a lot of people do. And so that social consensus leads to then political consensus, because the politicians care about all the people who have S&P 500, and then like Trump, like number one metric is like keep the S&P 500 high. If he needs to fire Powell or whatever, it doesn't matter. It has to get done. That's the power of distribution, social consensus, what it brings to you. So that's another one. Another thing that Vitalik made a good point about is the creation of new coins has to also be decentralized. If Bitcoin mining, if like this quantum computing thing now, forget like cracking the addresses and everything, but if like the elliptic sort of if it becomes very centralized and like one party is able to just like solve all these equations much faster than everybody else and get all the new coins, that's a risk as well, because then the Cantillon effect sort of becomes really big, where someone is just very close to the creation of money, and that's bad money as well. So we talked about credible neutrality, decentralization of new coins, fair distribution, no VC unlocks, no negative sloping curve. And the last thing I'll mention is good characteristic. And this is where I was maybe wrong about L1s versus L2s. Maybe they're a little bit parasitic. There is an emotional connection when someone is directly interacting with a blockchain or with something, because it's top of their mind. They're looking at it. I'm on Base, I'm on Arbitrum. This is the one thing where I think it is a little bit bearish for Ethereum, the asset, because the emotional connection of people, what they're using, is not the main chain. And even though the asset's there, and that's good, it's half the battle, it's important, very important. But like something like Celestia, if it's used as DA everywhere, you don't see DA. It's just a back end system, right? So the direct consumer retail interaction is not there, creates less of an emotional connection. So that's another attribute that I'll mention.
Yeah,
I completely agree on that last point specifically. It's and especially if these L2s start to use their own native token or USDC for gas, then that disconnect becomes even more apparent. But maybe Sam doesn't agree.
No, I actually agree, because like when we upgrade the Frax share token to just Frax, it's actually going to be the gas and staking token on Fraxtal. So I think that's a very important downstream social coordination method for how valuable it can become. However, actually what Jordi was saying is about L2, parasiticity is like good. Is this parasitic? How parasitic is it? Can you quantify it? And I think that's if this framework is going to get popular or accepted, you have to be able to quantify these things, right? And so I think literally the way to quantify whether like an L2 is parasitic or not is to think, what is the actual commodity demand for Ethereum in this L2, and could it have been on the L1, or could it have not? Could the fact that there's this chain, and so like the chain team, right? Like Frax, for example, we have Fraxtal. Could the fact that we have a chain and that we're able to do more things actually create more wealth and then downstream demand for ETH than if we only did stuff on L1? The demand for ETH itself, or like the digital commodity, is whether something is parasitic or not. And actually, the thing that Jordi brought up with Celestia is really important, because when I was watching the Celestia episode that you guys had, Andy, is that like I think the Celestia guys are super smart, Nick, and then everyone there, and then John, who's like very close to them there, is that's why they've built those ZK accounts, so that TIA can be the actual like product itself, the asset on every roll up that actually uses Celestia for DA. Because if, like Jordi said, if it's only DA, the only way to value this thing is cash flow. And I think they understand that that's not a 1 trillion dollar, or like a multi-trillion view for the next decade, right? And then they all obviously have huge ambitions in their amazing team, and they need TIA itself to be in and of itself like a sovereign commodity that just happens to power the Celestia technology, the blockchain. You happen to, that's one huge industrial use case. It's not the only thing. They want to distribute it to all of these downstream roll-ups and things like that. In fact, if roll-ups are parasitic, like if it's just like a rule of nature, if what I'm saying is not true, if I'm wrong, the TIA should basically go to zero, right? Like, because like, let's be honest, like the DA cash flow valuation is not ever going to by itself justify like tens of billions, if not over like 100 billion kind of thing. So actually, TIA is a bet that L2s are not parasitic, that they have the right structure to actually increase commodity demand of like a enshrined like sovereign commodity in this ecosystem. It's TIA, right? And that the team there understands that, which is why I really respect like Nick and them, and I like John's writings. I was reading his like ETH North Star writing the other time, and it's like very articulate and it's quantifiable. I think that's the most important thing, because we can all like say stuff that feels good or kind of sounds correct, or like, well, what is monetary premium or this or that, but I'm like very interested in like creating like verifiable, like there's two things, this and that. And then one represents labor. One is like just in and of itself the product. Can you quantify the demand for it? Yes, it's the summation of all the demand, right? It's like a very clear framework.
Yeah, I think that we're in agreement there. I mean, Vitalik also put out a piece as part of one of his article series when he was kind of in wartime mode on the roadmap. And one was about wanting an Ethereum alignment dashboard. And there were several metrics with regards to how Ethereum aligned some of these L2s are. So I'm not sure if you've actually seen that, Sam, but we were thinking about working on it on the Rollup website or something like that. But more broadly, I think there's some quantifiable metrics there. I want to pass it back to you, Jordi, to reflect on your key points there that make community money, and then following what Sam's saying about kind of getting to that point. If we're looking out down like with Celestians in this example, and there's going to be others, I think Solana, Sui are kind of some of the runners right now as far as like on the L1 side. Like, is there a world where there are a lot of commodity community money assets with provenance, with a decentralized creation of new tokens, with no VCs? Like what does the future world look like 5-10 years down the line? Do we have just like 4 or 5 of these, 2 of these? Is it just going to end up being like BTC ETH? Or like, is there a world where there could be dozens of these community monies? And then I assume just by kind of an abnormal distribution, there's going to be a perpetual amount or an infinite more amount of kind of non-community monies. But like, what is your future outlook for how that distribution pans out, specifically with regards to what Sam and you guys and you are discussing here?
I don't think that the number is going to change drastically from what it is today, unless we just look at it that the number of users will increase, and so therefore there will be more factions, and we can get a few more. But I think there's only so much space on the stock ticker board. There's only so many tickers that are going to be in the top 30 tickers, let's say, and if you're not really capturing mind share, then you're not going to be good community money because nobody is thinking about you. The attributes we talked about of what make it good over time will ossify. I think, as Sam said, we're in this point where like we have to kind of collectively understand more and agree on things more, and I think that will happen inevitably. Partly it'll just get driven by price performance. People will realize like, oh yeah, we don't want these like unlocks to happen, and we don't want this centralization or this aspect, or the richest guy in the world is Kal Samani now, like because Solana is at $2,000. Like, is this okay? Like, I don't know. There'll be a lot of these things happening that will shape and mold the details. In terms of the number, I think the number is kind of going to be like a few dozen ultimately. Like there'll be some small ones. The small ones will be like cults. We've always had cults in the world where maybe just like a few thousand people have some very strong core beliefs, and they're willing to do it. What you need to like imagine, because this is how I frame it to help me, is we have our concept of net worths, and whether your denomination is dollars or something more exotic, we just call it dollars. You need to be able to wake up and say, okay, I'm worth $2 million, and 60% of that is in this dog coin, and I'm okay with that because like this dog coin is community money for me, and like I really like believe that WIF or whatever it is and this is not a fake example. Like I do know some people where they're comfortable because they have such an emotional connection to this community that they're happy to hold 40% of their entire net worth. But the thing that's a stable equilibrium potentially. The thing that's unstable are things like, Ohm, Olympus, Dow in the past, where you got a bunch of these kids and the thing is pumping, and so they're all, for a while, it feels like it's like 3-3-3-3. We're all in this together, and the reality is, like, every day the percentage of their net worth that's in this like funny money, it goes up and up, and then like they're like 98% of their money is in this thing because this has gone up 1,000x, and that's all they have. Is that a stable equilibrium? Well, they will not sell it, or once somebody starts selling, then like it's just a fire sale, and then you get these pump and dump cycles, and we see that with a lot of these short-term meme coins, where the liquidity is like, it's like musical chairs. There's only like a couple chairs, and then when the music stops, everyone's like rushing to do this. That's a very unstable equilibrium, and it's always something to keep in mind. Like if you see, like say like XRP at $150 billion, it means that around the world, are there enough people that are happy to look at their wallet and see how much denomination they have in that thing?
Yeah, I mean, in that lens, it seems just like Bitcoin and ETH so far, I believe, at least, have achieved that level of broad global denomination.
There's a lot of Solana people that are like, they're just so, they're like, I guess they call it, sometimes I'm not in the trenches as much, but I know some people who are, and they tell me that in the parlance of what they use, it's like they go soul, maximize your soul, get as much soul as possible, play these games and then get soul. And then once a while, you stable up. That's what it's called. You stable up. I think that's where, like, you lose faith in the religion. You kind of get out of the church and you stable up, but then maybe you go back in. So like, it's a bit unstable, but some people maybe are in that category.
Yeah. I mean, and just by virtue of Dogecoin being like number 6 market cap or something, not to say that people denominate their net worth in Dogecoin, but there are coins that are not Bitcoin and exist in that category. And you even mentioned, like, these community coins. I like how you generalize those to not just dollars, but anywhere that you denominate your net worth in that currency. For instance, you go to Morocco, you value your net worth in Moroccan currency. And so these things are different in their different economic zones. One very general macro socio-political shift that I think has happened like very recently that has led me to believe that the number of those community currencies is going to increase has been this political shift from a globalist society where one world government, we're all going to be interconnected, everyone's going to use the same currency, into more localized phenomenon. And I think that thesis, as long as we have this mindset in place, in power, making decisions, I think we will continue to get more localized. We'll continue to see more community currencies evolve, more community economies pop up. But those tides could shift again, and then we could
Even
resort back to more consolidation.
No, I mean, I think you're on the right path. I mean, if we do end up getting network states, like, Balaji is trying to make network states, and a network state probably issues its own digital currency, right? Does it not? It would make sense, and that would be the currency of that community that belongs to that network state. They have a shared sense of belief, a shared emotional sort of outlook on certain things, whether it's accelerationism or whatever else, and they'll have their money probably. Like, why would they use somebody else's money? We'll see. I don't know.
Yeah. And we've seen these things pop up online. And so the internet, in my opinion, will accelerate this so that now we have almost programmable communities. Someone can launch it. You don't have to go pioneer some foreign land or go to Mars to go find some new fertile land in order to create a new community. You can do so online, pull the economy out, separate it from the state, from the geographical position, and spin up your own community that way with its own economy, with its own currency. So at least for the time being, it seems to accelerate.
I do think it'll stabilize, though, and we'll end up somewhere near where we are, because I'm curious what Sam thinks, but if I look at the real world and I look at something like BRICS, the BRICS countries,
Yeah.
so first you all break up, but then at some point there's an incentive to group together so you become a meaningful size and you become a block, like the EU, right? The EU had 20 currencies, and then they're just like, "I'll just do €1." So we're like as big as the US when you put us together. And now the BRICS countries are trying to do something, and so when it's digital, it's even easier to reaggregate stuff. I mean, we're even seeing like some of these AI coins, like Fetch. You got like a bunch of AI coins just grouping together and they make one coin. So we might see that at the end as well.
Yeah, I mean, I actually, when Balaji is one of the earliest investors in Frax and stuff, we discussed like network states and actually flat coins, the CPI pegged, kind of the first kind of thought of stable coins, which Frax actually issued the FPI, which is the first stable coin pegged to a basket of consumer items. It's kind of like an experimental currency. Balaji and I came up with that name in our talk, and then that was when he was formulating network state stuff. And so like I've been really big proponent and like bullish network states. I actually think that that's actually why I'm a pro like chainization guy. I think that's the fundamental unit of like a community on chain is like a blockchain, and then there's like smaller communities and stuff, just like how in international theory the fundamental unit is a state, right? And then the states can like join different kind of like blocks like BRICS, EU, and stuff like that, or even like military alliances for different parts like NATO, whatever. But the fundamental unit in like international relations is the state, right? And so I think the fundamental unit is the blockchain. Whether the DA is here or there or whatever, it doesn't really matter. It's structurally that way. And so Jordi's right. I think there will be a lot, but then there will be this kind of, what is it? What people have said, like everything is just about breaking stuff up and putting it back together. I think it's like actually like a startup thing, which is like, an industry like startups come and then they take stuff apart, right? Like like streaming service, and then like software as a service for like streamers and this and that, and then they put it all back together after the industry is mature as like a super app, like Stream Watch, blah blah blah, all this stuff, right? And I think that there will be a bunch of blockchains, and then there will be a lot of them coming into like economic zones, right? You see this kind of in the super chain. Fractal is like kind of signaled that it's in the super chain area. There's Cosmos, the Celestia has its own with its own zone essentially with like DA communication. But I think the fundamental unit of this stuff of like the network state is a blockchain, and then does it have downstream communities or like a real world community of like land or things like that. And actually, I think Frax might be like one of the closest first like proto network states, because we call it the decentralized central bank, and you can't have a blockchain without like a kind of an underlying enshrined like kind of like financial layer, right? That everything else can be built on with like stable coins, stable units, credit, and all that stuff. So it's kind of like has all the proto ingredients of life, so to speak, for like a network state.
Yeah, it does. And it's interesting because in the context of this framework that we've been talking about, we have two very like fundamental things as part of a blockchain. And if we're treating blockchains as this fundamental unit of a network state or an on-chain economy, you have the denomination of economic activity in that economy, and then you have something like labor, like you mentioned earlier. And so how Bitcoin has been able to decouple the economic activity in its economic zone and denominate it in Bitcoin and maintain its community currency or type 1 type currency status, and decouple that from the labor that occurs in its network state or economic zone is it's very interesting to see how Bitcoin has been able to maintain that decoupling. And so once we start to denominate more of its of these economic activities in its choice currency, I think it is very natural to denominate the labor that occurs on these chains, on these apps, on these chains, in these economic zones as such as well. And that's the struggle of treating something like ETH or another currency that is currently in its at least fading into that type 2 realm and bring it back to the type 1 realm?
Yeah, I think there's a few important things where it's like, that's why I said before, like, I think the enshrining something as like a gas token is not in and of itself like brings value. Like, it doesn't matter like the burns of like it being ETH or something because it's gas. Again, that's like a like almost a like trap or like a pitfall. It's more like it has downstream coordination effects about what it's denominating, like LP pools in all of this stuff, trading NFTs, like Jordi was saying, and it's basically in enshrining in software a social contract, and like people miss that. They think, oh, it's like on like base, like ETH is like gas, like okay, but it doesn't even matter like how much it burns, like that's not even useful. What matters is everything on base. There's no base token. All of the LPs are ETH. All of the memes that launch on like base, most of that denomination goes to ETH, or at least it has a privileged position socially of being that unit, and systematically it increases its actually denomination power. So there's a lot of these social coordination things like Enshrine Gas Token, other things that I think people mistake as like, oh, this will burn a little bit more, increase the discounted cash flow. But it's not about that, actually. It's like the exact opposite. That's like a side effect. But the main thing is the social coordination of treating it like more like Bitcoin rather than like a labor representing token.
Yeah, I mean, just to give my final thoughts and wrap up on my side, I think just to hammer down that, of course, like this is like social coordination. We see it. We can't deny that this is what everything is based on. I mentioned a lot of the characteristics that I think kind of drive this social coordination, or more appropriately, like make it sticky, where it's like it's like a game theory, like equilibrium, and you can go through cycles with it, and it sort of sticks. When you go through these like bull market manias like we've had recently, these things go out the window because people are buying the crappiest of assets or going up. It doesn't matter. Grab money, money, money. And then like when things quieten down, everyone starts reflecting, and we start seeing, and we're learning. I mean, I'm learning, Sam's learning. When I say learning, it's not just like the first principles thinking, which is what we both do, but also, some of our assumptions get tested in reality. Like one assumption is what makes a good asset for a balance sheet. And nobody's had digital assets on their balance sheets. Like maybe a couple companies had Bitcoin last cycle, I think Tesla and maybe a couple more. If this cycle we start to, having more of this institutional adoption, we'll see like what assets they choose. And I'm guessing that they want credibly neutral assets. They don't want, some blockchain that is 80% held by, a few people. Like they want this like neutral asset that can be a diversifier in a balance sheet, and so we'll kind of get some empirical evidence as well, and it'll be an ongoing process. But I'm so happy that we're having this discussion. Like thank you guys for inviting, because I've been keen to consume more content, and there hasn't been enough content, so it's good to start making it, and then other people can chime in, and then hopefully we can kind of stand on each other's shoulders.
Yeah, no, this is I'd love more discussions like this, and Jordi, is always great to talk with you and your view. We agree on too many things. Next time, bring a guest that's like we can fight with.
Get Kyle Samani with Sam next time.
Thank you, guys. Appreciate you staying over a few minutes.